by exploring the news related to aquaculture, I realized that there is a news which is combining or integrating the financial scheme to the aquaculture. This is the post by Dr. Mohammed Ashraf Ryder on 2025 March 3rd. It's about the Kisan credit card scheme in fisheries and aquaculture, which is a comprehensive analysis. This is how the post is. The India's fisheries sector has witnessed remarkable advancements in credit infrastructure through the extensions of the Kisan Credit Card (KCC) scheme to the fish farmers and fishers. This groundbreaking initiative implemented in 2018 to 19 has revolutionized working capital accessibility for stakeholders across the fisheries value chain. As of January 2025, over 4.5 lakh KCCs have been sanctioned with a cumulative disbursement exceeding Rs 2,898 crore, demonstrating the scheme's significant impact on the sector. The integration of the KCC with digital platforms like Jan Samarth portal has further streamlined application processing, enhancing access for beneficiaries throughout India. This comprehensive analysis explores the multifaceted dimensions of the KCC scheme in fisheries and aquaculture, examining the eligibility criteria, financial benefits, implementation progress, complementary schemes, and its transformative influence on India's position as the world's second largest fish producer. The Kisan credit card scheme, originally designed for agricultural farms, was strategically extended to fisheries and aquaculture in 2018 to 19 by the government of India to address the distinctive working capital requirements of this specialized sector. This landmark decision recognized the critical role of institutional credits in sustaining and expanding fisheries operations across the country. The Reserve Bank of India formalized this extension through its circular FIDD CO FSDBC 12 slash 05.05.010 slash 2018 to 19, issued on February 4th, 2019, which provided comprehensive guidelines for financial institutions regarding the implementation of KCC for fisheries. These guidelines underwent a significant refinement with a revised circular released on 18 May 2022 to better accommodate the sector's evolving needs and address implementation challenges identified during the initial years. The KCC scheme for fisheries was conceptualized with a dual objective to enhance the financial inclusion of fishers and fish farmers who had traditionally remained outside formal banking channels and to provide affordable credit to stimulate productivity and profitability in the sector. The integration of fisheries within the KCC frameworks represents a paradigm shift in agricultural credit policy, acknowledging fisheries as a critical component of India's rural economy deserving specialized financial interventions. The Department of Fisheries, in collaboration with the Department of Financial Services and banking institutions, develop detailed operational protocols to ensure uniform implementation across diverse geographical regions with varying fisheries practices. This collaborative efforts created a robust foundation for delivering customized credit solutions to stakeholders engaged in both inland and marine fisheries activities. And the administrative architecture of the KCC scheme for fisheries involves multiple stakeholders working in tandem to ensure effective delivery. At the policy level, the Department of Fisheries under the Ministry of Fisheries, Animal Husbandry and Dairying provides strategy and direction, while the Reserve Bank of India establishes the regulatory framework that guides the financial institutions. The National Bank for Agriculture and Rural Development (NABARD) plays a pivotal role in refinancing and capacity building, particularly for regional rural banks and cooperative institutions engaged in KCC disbursements. At the ground level, public and private sector banks serve as the primary interface with beneficiaries, processing applications and disbursing loans in accordance with established guidelines. This multi-tiered administrative structure ensures comprehensive coverage and specialized supports tailored to the unique requirements of the fisheries sectors. The KCC scheme for fisheries incorporates meticulously defined eligibility criteria that address the diverse profiles of stakeholders within the sector. The criteria are categorized based on the operational domains of inland fisheries, aquaculture, and marine fisheries, recognizing the distinctive characterization and requirements of each subsector. For the inland fisheries and aquaculture, eligible beneficiaries include individual fishers, fish farmers, group enterprises, partners, sharecroppers, tenant farmers, self-help groups, joint liability group, and women's collectives engaged in fish production activities. And these stakeholders must demonstrate legitimate access to essential fisheries infrastructure through ownership or lease arrangements. Qualifying assets include ponds, tanks, open water bodies, raceways, hatcheries, and rearing units that form the productive base for fish cultivation. Additionally, beneficiaries must possess the necessary authorization certifications or licenses mandated by respective state governments for conducting fish farming operations, ensuring compliance with regional regulatory frameworks and environmental standards. This comprehensive approach to eligibility ensures that the scheme reaches genuine practitioners while while maintaining operational integrity through appropriate documentation requirements. In the marine fisheries domain, the eligibility framework encompasses beneficiaries who own or lease registered fishing vessels or boats and possess valid fishing license or permissions for operating in estuarine and marine environments. The scheme also extends to stakeholders engaged in fish farming and mariculture activities in estuaries and open seas, recognizing the growing significance of these subsectors in enhancing marine productivity. The eligibility criteria accommodate state-specific variations in fisheries and allied activities, providing vast flexibility while maintaining core qualification standards. This tailored approach ensures that the unique challenges and operational contexts of Coastal fishing communities are adequately addressed within the KCC framework. The KCC scheme for fisheries offers a comprehensive financial package designed to address the specific working capital requirements of the sector while providing significant interest subsidies that enhance affordability and accessibility for those beneficiaries. Under the scheme, the farmers receive KCC loans at a subsidized interest rate of 7% per annum, significantly lower than commercial lending rates for similar credit products. This concessional rate is achieved through an upfront interest subvention of 1.5% provided by the government of India to participating financial institutions. Further enhancing the scheme's affordability is the prompt repayment incentive (PRI) of 3% available to borrowers who adhere to repayment schedules, effectively reducing the effective interest rate to an exceptional 4% per annum. This tiered approach to interest subsidization creates powerful incentives for timely repayment while substantially reducing the financial burden on borrowers, particularly small scale operators with limited cash flow capacities. A significant advancement in the scheme's accessibility is a recent increase in the collateral free loan limit for KCC fisheries from Rs 1.6 lakh to Rs 2 lakh, effective from January 1, 2025, as per the RBI circular dated December 6, 2024. This enhancement substantially reduces entry barriers for small scale operators who often lack conventional collateral access, thereby expanding the scheme's reach to more vulnerable segments of the fisheries community. The collateral free provision represents a progressive approach to rural finance that prioritizes the production potential and income generating capacity over traditional assets based security requirements, aligning with broader financial inclusion objectives. The KCC scheme for fisheries has demonstrated eh, significant momentum in terms of application processing sanctions and disbursement across diverse geographical regions, reflecting its growing acceptance and relevance within the sector. According to official data from the Department of Financial Services, as of January 17, 2025, the scheme has received 644,529 applications nationwide, with 450,799 applications successfully sanctioned, representing an approval rate of approximately 70%. The total sanctioned amount stands at an impressive Rs 2,898 crore, indicating substantial financial infusion into the fisheries sectors through this dedicated credit channel. The differences between receipt and sanction application, with 18,337 applications pending, suggests an efficient processing system with limited backlogs. Despite the complex documentation and verification requirements inherent in fisheries finance. These metrics demonstrate the scheme's operational effectiveness and the capacity of the banking system to absorb and process specialized credit applications from the fisheries sectors. Complementary data from June 2024 indicates that 426,666 cases has been sanctioned to fishers and fish farmers across all states and union territories. in highlighting the scheme's comprehensive geographic coverage and gradual expansion trajectory. This widespread distribution ensures that the benefits of concessional credits reach diverse fisheries ecosystems from coastal marine operations to inland reservoir and pond-based production systems across the country. A transformative development in the scheme's implementation has been the integration of the KCC fisheries application process with the Gen Smart portal, making a significant advancement in digitalization accessibility. This integration successfully inaugurated by the Department of Fisheries revolutionizes access to credit facilities for fishers and fish farmers by streamlining application procedures and enhancing transparency in processing. The digital platform enables beneficiaries to apply for KCC loans online, track application status in real time, and manage their loan accounts through an integrated interface, substantially reducing transaction costs and processing times. The Gen Sama portal integration represents a strategic convergence of financial technology with agricultural credit delivery, creating a more responsive and user-friendly system that accommodates the unique operational context of fisheries stakeholders. This digital transformation has particular significance for remote fishing communities and small-scale operators who previously faced geographical and logistical barriers in accessing institutional credit. The initiative underscores the government's commitment to leveraging digital tools for enhancing financial inclusion and service delivery in traditionally underserved sectors. Understanding the KCC scheme's impacts requires contextualizing it within India's broader fisheries landscape, which represents a significant economic sector with substantial production volumes and growth dynamics. India maintains its position as the world's second largest fish producing nation, accounting for an impressive 9.64% of global production. The country's total fish production for the fiscal year 2022 to 2023 reached an estimated 7.54 million metric tons MMT, with the inland sector contributing 13.11 MMT and the marine sector providing 4.43 MMT. This production profile highlights the dominance of inland fisheries, which constitutes approximately 75% of India's total fish production, reflecting the sector's evolution from traditional capture based systems to more intensive culture based production models. The sector has demonstrated remarkable resilience and growth and maintaining an annual average growth rate of 6.7% over the past 5 years, significantly outpacing many other agricultural subsectors. In the global agriculture landscape, India holds the second position after China, reflecting the country's successful adoption and adaptation of advanced aquaculture technologies and management practices. This prominent global standing underscores the strategic importance of fisheries in India's agricultural portfolio and highlights the critical role of specialized credit interventions like KCC in sustaining and enhancing this competitive advancement. The sector's Structural composition reveals interesting patterns that influence credit requirements and utilization in land fisheries comprising pond, culture, reservoir fisheries, and riverine systems. It dominates the production landscape with three-quarters of the national output. These segments typically involve more intensive capital investment in infrastructure development, species stocks, feed inputs, and disease management systems, creating the distinctive working capital cycles that the KCC scheme aims to address. The marine segments, while smaller in volume, metric contribution represents significant economic value through high value species and export oriented production. With specialized credit needs for vessel operations, year maintenance, and post harvest handling. The KCC scheme's design accommodates this differential requirements through customized credit assessments and disbursement protocols for each subsector. The KCC scheme for fisheries operates within a broader ecosystem of government initiatives designed to provide comprehensive support to the sector through infrastructure development, risk mitigation, and technological advancements. A critical complementary initiative is the Fisheries and Aquaculture Infrastructure Development Fund (FIDF) implemented by the Department of Fisheries since the 2018-19 financial year. This specialized financing mechanism provides concessional finance for developing various fisheries infrastructure facilities, offering an interest suspension of up to 3% per annum with an extended repayment period of 12 years, including a 2-year moratorium on principal repayment. The FIDF and addresses the long-term investment needs of the sector, complementing the working capital focus of the KCC scheme and creating a comprehensive financial support structure that spans both operational and infrastructure dimensions of fisheries development. The synergistic relationship between KCC and FIDF creates a multi-layered credit architecture that addresses diverse financial requirements across the fisheries value line. While KCC provides readily accessible working capital for day-to-day operations and seasonal inputs, FDIF supports transformative investments in production infrastructure, cold chain facilities, processing units, and marketing systems that enhance overall sector role capacity and efficiency. This integrated approach ensures that both immediate operational liquidity and long-term growth capital are available for stakeholders and concessional terms. By recognizing the inherent risks in fisheries operations, particularly from natural calamities and accidents, the government has implemented a group accidental insurance scheme under the Pradhan Mantri Matsya Sampada Yojana (PMMSY). This scheme provides comprehensive coverage including Rs 5 million for death or permanent total disability, Rs 2 million and 50,000 for permanent partial disability, and Rs 25,000 for hospitalization expenses resulting from accidents. Significantly, the entire insurance premium is borne by the central and state governments with no financial contribution required from beneficiaries, making this an exceptionally accessible risk mitigation tool for vulnerable fishing communities. This insurance coverage complements the KCC scheme by providing financial security against unforeseen complexities that could otherwise disrupt the loan repayment capacity and livelihood stability. This integrated approach to credit and risk management creates a more resilient operational environment for fisheries stakeholders, enhancing both productivity and financial sustainability across the sector. The operational framework of the KCC scheme for fisheries incorporates streamlined application procedures and efficient processing mechanisms designed to minimize bureaucratic delays and enhance accessibility to target beneficiaries. The scheme mandates that bank authorities issue KCC within 14 years of receiving completed applications from fish farmers, establishing a clear timeline that ensures prompt processing and reduces waiting periods for credit access. And this standardized processing window represents a significant improvement over traditional agricultural loan processing, which often involves protracted timelines and multiple verification layers. The expedited process is facilitated through standardized documentation requirements that have been rationalized to accommodate the operational realities of fishing communities while maintaining necessary due diligence standards. To further enhance outreach and adoption, the government has periodically organized nationwide KCC campaigns specifically focused on fisheries and animal husbandry sectors. A notable example was the comprehensive uh, campaign conducted from September 15, 2022 to March 15, 2023, which intensify awareness creation and application facilitation across diverse geographical regions. This focused campaign mobilized institutional resources at multiple levels from central banking authorities to district level financial institutions and local fisheries department, creating temporary acceleration channels that expedite application processing and reduce pendency backlogs.